All right, guys. So that gets us halfway through our breakout. Next up, we have Alex Cole. He is the king of technical analysis. He's developed tools used by institutions, tools on the infamous or maybe famous, not infamous, Bloomberg terminal. He speaks at events. Alex, it is an honor to have you here with us. And again, everybody, drop your questions in the chat. I'll be watching them and asking Alex as we go. So Alex, with that, I will let you take it away.
Thank you very much. Luke, thanks so much. I'm really honored as well and excited to be here. It was a nice lead in from the previous presenter to talk a little bit about technical analysis. That was great. So that's exactly what I want to do, talk about technicals and then show you a tool that we've created called the GoNoGo Charts. So I'll share my screens so that you can see. Okay, so between me and my business partner over at GoNoGo Charts, we've spent a lot of time, decades really, talking to technical analysts, shops all around the world. And we've also spent several years teaching technical analysis to colleagues, institutions, different trade desks, anybody really in the financial marketplace. Recently, we created the CMT prep course over at Wiley Publishing. So I created content and video lectures for the CMT prep course. And the CMT stands for the Chartered Market Technician. And the CMT Association is a global technical analysis community. Now, I bring that up just to say that there was always a common source of frustration. And it was the same frustration for whether it was new students we talked to or sophisticated technicians. And the last presenter did a great job of talking about that when he brought up the chart and said, now you need to be able to read these to help you make the kind of calls that he was talking about with options. And so let me go through what I'm going to do today is define technical analysis quickly, discuss how to build a technical analysis process that uses common concepts to hopefully find opportunities, and then show you the problem that we were coming into over and over again with so many clients and students that we were talking to. And then we'll introduce what we hope is a way to solve the problem and look at some specific examples. And I'm sure Luke will jump in with questions at the end or throughout. So technical analysis to me is the study of price and volume. It's the visual study of price and volume. And there are so many ways that you can make that definition more complex. But to me, it's just simply using a visual tool, the chart, to study price and volume history. And all of the other indicators, everything that you were just looking at, are sort of fancy ways that we use, but they're still derived from price and volume action. So real quick to start, what does a technician look for? What's he trying to do? Now, you'll have seen plenty of these concepts, I'm sure, as we go along. But as we introduce the concepts, I'm going to just build a chart for you so that you can follow along. And it'll help illustrate the examples that we're going to work with. So arguably, the most important skill in technical analysis is that of trend identification. Technical analysis at its core, and technical analysts focus on ways to identify trends in price action. Now, if an analyst can successfully identify a trend, then you can profit on the majority of the move. Difficult, obviously, to call bottoms and tops, but if you can find a major trend, you can profit on the meat of the move or the bulk of that price action. So how do people do that? Well, moving averages. You will be hard pressed to find a technician or any chart where you don't see a moving average. So I noticed that you were looking at TradingView charts in the last presentation as well. But in TradingView, you go up to indicators. You can add a moving average. I'll add a couple. There's often an interplay between multiple moving averages on a technical chart. And I'll change the settings here to common ones. A lot of people will have the 50-period moving average, and a lot of people will have the 100. A lot of people will have the 200. I'm sure you've heard of the death cross and the golden cross with the 50 and the 200. I'll put the 100 in here. And you can see now how this really does quite a good job of pulling out the major moves. You can see that let me do that again. It didn't take the 100.
And can you explain the death and the golden crosses really quickly, Alex?
Absolutely. So the death cross, golden cross is when a 50 period moving average will cross above, or cross below a 200 period moving average. And it's very well looked at, and even crosses over from technical analysis to being talked about on major financial news publications, TV shows. It's something that is common enough that a lot of people will know what is meant by that. And this chart you see now has the 50 and the 100, and you can see that they do a fairly good job, as you see my mouse moving here, of pulling out the major directional move of the trend. Now, there is issues with moving averages and any trend following concepts in that they lag price action. So by the time the 100 moving average is crossed, you've given back a bit of the trend. But that is definitely probably the first thing that somebody will put on a chart. Now, hand in hand with trend identification goes momentum. And this is likely the next area of study for most people new to technicals when they build their chart. Now, momentum indicators are different. They measure the velocity of price change. So how quickly has price moved in one direction or another? And momentum can be very valuable in assessing both the strength of a trend, but also identifying areas that are overbought or oversold in markets that aren't really trending, but more sideways or consolidating markets. And if we're going to think of the most widely used, probably the most widely used technical indicator of all is the RSI. That's the relative strength index. So if we add that here, the RSI is trying to give you a sense of how excessive price has moved in a certain direction, with the idea being, if price has swung really fast and really far in one direction, it may well come back. So it gives you a sort of overbought or oversold indication. Now, there are more advanced ways to use momentum indicators like RSI in a trend. There's also the concept of looking for divergence, which we'll talk about in a second, but probably the most popular indicators, moving averages, RSI, and we're starting to now get a picture that can help us look for opportunities. Another one that you may well have seen, or a lot of people will add next to the chart, is something called the MACD. Now, that's the moving average convergence and divergence indicator. Now, this is often called a bit of both in terms of what kind of indicator, trend following and momentum. And that's because it's based on the difference between moving averages. And so understanding how a shorter term moving average relates to a longer term moving average is very valuable and can be very telling. When you open up a new chart in TradingView, you'll see you already have volume. Volume is something that is very very much used, as we were just talking about, those levels where the prices traded with the highest volume can prove to be support and resistance levels. And that was something that was indicated by a different volume picture called the market profile chart. But this is just straight volume on the bottom of the chart. And what we like to look for in volume, and volume is a confirming indicator, meaning that if there is a move in price, you want to see heavy volume supporting that direction. If you get a move in price with low volume, there's less conviction from the market. So volume also important to look at. Let's put something else on here now. A lot of people will then branch out and look maybe at something that gives them an idea of market volatility or price volatility. And probably the most commonly used is the Bollinger Bands. Now, the Bollinger Bands, if you're not familiar, try to display the two standard deviation bands above and below a mean of price. The idea here is that if price trades outside of those bands, that's very, very unusual and therefore perhaps important information, because most of the time price would stay within the bands. Now, there's a couple of different ways to interpret when price trades out of the band. You can either bet on mean reversion when the bands are wide, right? If price comes outside the band, you might expect some mean reversion to that mean. But when price is relatively narrow, the idea is more often that you would trade in the direction of the break of the bands. So let's stop there. That was quick, it was fast, but we've built a chart based on what I think are very sound concepts using tried and true technical indicators. But already the chart is perhaps to some a little bit overwhelming. For example, often basic technical analysis that, you know, the previous presenter was just talking about, some of the most important are levels, and I couldn't agree more. Drawing trend lines, finding patterns, it can be of paramount importance. But even on this chart, with all of the valuable tools that we've added, it becomes a little difficult to see price itself. So harder to, you know, harder to draw a trend line in here because of everything else that's going on in the chart. But I've spent years, and you know, other colleagues of mine have spent years studying technical analysis. And at the end of that study, this information is all valuable, and it's information that I want on the chart. But again, I don't want to miss important action because the chart's too crowded. So this was the issue that I was running into time and time again that I mentioned at the beginning with clients, other technicians, students. So having done the research, having done the work to understand technical analysis, we're building charts that are harder to read. And this is a simple chart. You've probably likely seen charts that are much busier and even more, with even more activity on it, making it even more difficult to read price. Some people have many more panels, and the price panel is very, very small, making it very difficult and obscuring the important price action.
And Alex, do
yes.
you mind if I pop in with a couple questions out of the chat?
Sure.
First one is, do you use Fibonacci at all?
I do. It's not part of my everyday chart, but I will use Fibonacci to look for expected levels that might act as support or resistance. Let's say if I am in a trend, I may throw on the Fibonacci retracement, particularly for the ones that everybody's looking at, the 61.8% golden ratio, which is considered to be, you know, super important. And so I'll look to see where that is, to see if price might run into trouble trying to break through a level that I know a lot of people are looking at.
Okay, and we got a question coming in from Eric Witchen asking why isn't Fibonacci a part of your standard toolkit?
Because that's a good question, Eric. I don't find that it tells me much about the trend or the strength of price moves. It just sort of reports once something is finished. So with the Fibonacci retracement, you'd have to find the high and the low of the move and annotate from those 2 points, and then it'll give you some information going forward. But before I do that, I want to have a complete picture of any of the security that I'm looking at in terms of the trend that it's in and the momentum and its volume. And that's my go-to, what I need to know about a chart. And then once I've done that, I may well throw on a Fibonacci to see what lies ahead or where I might find support or resistance, but it doesn't tell me much about the move we're in.
And Alex, let me hit you with one more right now.
Sure.
Before you get back to it, you're going to make a very happy person. He's asked this question a few times, but how do you think about stocks that are up at an all-time high? So they've got no previous support or resistance. They're breaking out up and away. You know, any thoughts, ideas there?
Sure. Well, hopefully, you know, as well as I go through and I show you some charts, you'll see some clarity with technicals. But the statistically proven method, if you read the books and all the rest of it, is momentum investing. And momentum not in the way that you think of with indicators, but buying strength, right? That is proven statistically to be a method of investing that outperforms. So a lot of people will say buy low, sell high, but a technician typically is buying high and selling higher. So breakouts is an example of that. So if a security can break to a new high, the trend is up, unless you have other information on your chart telling you that you know now the trend is threatened. But a break to a new high, all else being equal, is a breakout and an indication that there is market enthusiasm and sentiment is strong on the chart. And until the trend changes, buying strength is a really decent way to look at charts.
Awesome. Thanks, Alex. All right, keep going. I'll stop cutting you off for a little bit.
That's okay. Hopefully that helps. So this was where I was, but more complicated, probably with more panels and more stuff on the chart. And so where I ended up and what I came up with is a chart that looks more like this. Now, this is, we're calling it GoNoGo, based on a pass-fail type of testing system that's used often in the military and in NASA, and it just makes sense, right? Is it a go for your decision, for your investment, for whatever it might be that you're looking for? Now, this has been many years in development, but really only recently made available. So it's kind of like a first look on a large public scale for the audience here. But in this chart, it's a color-coded blend of everything that I found essential to have on my chart. So what I wanted to look at is in this chart, and it's color-coded so I know what the technical environment is based on all of the tools that I've put into the chart. Now, there's more information, much more information in this chart than that one we just looked at. But hopefully you can see that the price isn't obscured by any other lines or made smaller by, you know, panel after panel after panel. It's just one chart gives you a complete picture in terms of trend, momentum, volume, volatility. And so if I want to quickly annotate, like as we were just talking about levels right here, important levels from previous lows, previous gap down, runs up against it, hits resistance, runs up against it, hits resistance again, finally can break through. So I can do that easily on this chart because it's not obscured by anything else. If we were looking at this chart in this time period, very, very easy to see trend lines just by the fact that there's nothing else on the chart. So what we were able to come up with is something that gives me colors and flags to identify situations that give me a complete technical picture of any security, market, asset, whatever. And this is based on some of the things that I showed you in the previous chart, but a lot more, but nothing sort of far out of left field. It's the tried and true, robust, proven, traditional technical analysis concepts and methods. So what I was hoping to do now, Luke, is to go into a few specific examples where we can look at some single stocks and identify opportunities based on a really sound technical analysis basis, and then have a look at the GoNoGo charts to see where those situations were highlighted and flagged.
I love it. Everybody likes trade ideas. Let's do it.
So this is a chart of the S&P. Now the SPDR, right? The tradable ETF SPY for the S&P 500, and this is the period of time before we had the volatile period and the crash in March. So I wanted to highlight how somebody who was looking at a chart like this would have been bearish, but then how hopefully simple the visuals become on the GoNoGo to look at the same sort of situation. So if you follow along here on the right side of the chart, there's a lot going on that is going to give us an indication to be bearish. Price breaks below our first moving average, and then this long bar here breaks below the longer term 100 moving average. Now, is that necessarily going to mean that the market will fall apart like it did? No, not necessarily. You see the interaction with the moving averages here, but when it comes down to moving averages, it typically acts as areas of support. So we'd be looking at this now expecting it to find support and maybe rally if we think the trend is healthy. Now, interestingly, on that fall down, you've got heavy volume. That's another thing you'd look at. And you also have it below the lower band of the Bollinger Bands. Now, again, remember I said there were two ways to really interpret Bollinger. One is that you could be thinking if it's below the Bollinger Band, we might expect it to come back in mean reversion. But if the bands are relatively narrow, which they are really at this whole period, we may consider trading in the direction of the break. Now, that is adding to the opinion we're getting from looking at the moving average being tested. Now, if we move down towards the other panels, you can see really clear bearish divergence. As price makes higher highs in the panel above, our trusty RSI makes lower highs in the panel below, and that's bearish divergence. So you add that to your thinking in terms of price crossing the moving average, the gap down, the volume increase, being outside the Bollinger Bands. Now the momentum is not as strong and healthy as it was through this entire period. It wasn't able to break above 70 as it has done before. You're starting to be a little more bearish. And then you've got this real drop in RSI to boot. In the lower panel, you have MACD. Now, MACD gives a lot of signals. So I'm very wary of taking MACD in isolation, but when you add it together with what we're seeing in the rest of the chart, it can be helpful. You see that there's been sell signals before on MACD. We have another one here, right current in this bar, but we now see MACD crashing down below that zero line, which it hasn't done for several months. So at this point, there are a lot of colleagues that I would talk to, and myself, we're talking about perhaps recommending taking some risk off, moving assets, moving money to safer assets based on a real confluence of events on a sound technical analysis chart. So that's all great, but you need to have the understanding and the practice and maybe the years of research, of studying to understand the situation from a technical chart. If we look at the GoNoGo chart for this same period, this is what we see. We know I know from what's in this that the technical trend picture changed on this amber bar where we saw the gap. And then on the very next bar, we get a no-go signal. So it brings out for the first time in several months a no-go signal. And then this is the follow-up to the rest of March and into April when we were in free fall. So that was when the markets rolled over. I thought then what we could do is look at an example of coming out of the crash, maybe as a way to look for an opportunity in any rally. I also wanted to show that any technical analysis, and of course the GoNoGo charts, but any technical analysis, any good technical analysis can be done intraday and can be done on any time frame and with anything. So I have loaded up an intraday chart here of Apple, figuring everybody knows of and looks at Apple, but this is a 4-hour chart now of Apple. And so Apple's experience.
And just really quick to clarify, so each candle on this chart represents 4 hours, correct?
That's correct. So the charts we were looking at previously, sorry, Luke should have mentioned, were daily bars. And you can look at, if you're really long-term, people will look at weekly and even monthly bars. But people will also go all the way down on an intraday day trading type of, or not even day trading, but like traders maybe that, I worked with plenty of people that were trading just to get positions for PMs. They were traders, not day traders, but traders. And so they would use very quick charts to get best entry for the day if their PM would say, I want to buy a certain amount of stock. So you could use these charts down to 5-minute bars, 1-minute bars, 30 minutes. Just wanted to illustrate, as you said, that you can change the length of the bars. So this is a 4-hour. And again, I'll just run you through the way you might set up to become bullish after the major market move down. Now, the move down in Apple wasn't quite as bad, but still significant. In fact, the whole tech sector did very well relatively, but still, you could be looking at this period here in the end of March as a bottom, and then looking at when do we think the trend has changed, and can we get back into to a rally? So now we're looking at the similar kind of idea. We've got price breaking above its moving average towards the right side of the chart, also trading outside of the Bollinger Band, after the bands have narrowed quite significantly from the volatility we saw before, starting to make us feel maybe also setting a new high here. You can see for the first time after the crash, really setting a new high and a higher low, right? So that's definitely right there, changing environment. You then can combine that with what we see on RSI, which is higher lows and higher highs. So in this case, we don't have any divergence. We have confirmation, perhaps, that this higher high and higher low is starting to become a new trend. If you look down then at the MACD, you see that we've got a buy signal, but again, importantly, above zero for this period for the first time since the crash. So maybe at about this point in here, especially after a retest there of that moving average, a seasoned technician may be thinking, okay, I'm starting to be bullish on the stock. And now we can compare that to a GoNoGo chart, and we can hopefully see how much cleaner and how easy to read, and hopefully the simple visual adds some value and is powerful for somebody looking at the chart. We see the trend and the no-go trend indicating the volatility of the times during the crash. And then a little bit earlier, really, than we were looking at on the previous chart, we get a go flag identifying that the trend has changed. We can also look to our oscillator, which shows positive momentum, which is also very encouraging. But just in general, the go flag highlights that trend and change in trend. Now, I've just
Alex, really quick, we've got Rick in the chat. He's asking if the GoNoGo chart is real time or is it a back test?
No, these paint real time. Obviously, that will depend on if you have real time exchange data, but they will paint. I'll move forward to a current chart actually in the next example, but it's current. It paints the current bar. The bars are always painted based on price action. But the actual data you're getting will depend on if you're paying for real time from the exchange, of course. But for like daily charts, then yes, it's, well, for any chart, the GoNoGo charts paint real time, but your data will depend on if you actually have real time data, but that's totally separate from the chart.
You're saying versus like if somebody gets 15-minute delayed quotes or something along those lines.
Exactly, but their charts to them will be current and updating.
Okay.
But if you're on a 15-minute delay from the exchange, then that's the price that you're getting. So, and one quick thing that actually, when I pulled up this chart, jumped out at me, which I just wanted to remind you guys. When we were looking at this one, I didn't see it so quickly, but you can see in here a very, very important level that, depending on how familiar you are with these, may well be looking like a bullish head and shoulders bottom. At this very significant level of support, it's been tested, it was broken. We've got maybe a left shoulder, a head, a right shoulder. Whether technically you should add in volume to see if that fulfills all the requirements of a really, really textbook head and shoulders, but definitely some sort of bottoming pattern. And so that level looks very important. You can see it break and retest, but I didn't see that right away. But if I'm on this chart, because there's nothing else on here, that level jumps out to me anyway a little bit quicker because of the size and the visibility of the chart. And then you see Apple going forward. This is the current 4-hour chart of Apple. And this is the last bar, Neil. This is updating live, not on Saturday, but this would be and painting. But you can see how the trend is highlighted. And also, just to point out, the trend ranges in colors. These the lighter colors are weakening. So as the trend is strong, any kind of short-term correction, but that still stays in trend, is highlighted by a weakening color. So at this point, you see the weakening trend, you see a oscillator test at 0, and then a resurgence goes back bright blue. We have other icons and tools in here to give you low risk entries, short-term corrections. But I just wanted to point out, if somebody's wondering why it isn't all blue, all the same kind of blue, this is showing that there is some weakness in the trend here and you want to pay attention, but then it resumes and stays in the general go trend in Apple. So the last example that I wanted to show was for a couple of reasons. One, there's a lot of chatter and a lot of people that I talk to now who are starting to perhaps wonder about the strength of the rally. You know, we've seen that this week has not been as strong as previous weeks. We've rallied so fast and so hard out of the lows in March. And people are wondering if this rally is overextended and if we will see further correction to the downside, even to possibly test those March lows. And so, of course, that's opinion, right? But if you look at the charts can hopefully tell you what to do. So if you are of that opinion, I wanted to show a way to perhaps hedge risk, or even take a bet on towards that side of the move. So what I'm showing here is still an intraday 4-hour chart, but this is of TLT, which is a 20-year Treasury bond fund. Now, if we are struggling in this rally and if we are thinking that we might roll over, and maybe you've already capitalized a lot on the rally and just sort of want to move some money to some safer place, this can help you do it, because you could buy Treasury bonds, often used as a flight to safety. So if you're bearish on the stock market, you could then look for opportunities such as this. Now, remember, this is bond prices, not rates. Bond prices will tend to move inversely, right? So this is a opportunity perhaps to profit on a downturn in the market. I just wanted to be clear on that. So this is TLT. Now, the same thing, we're looking at a very similar chart that we looked at before with the same information on it. We've got a narrowing in the Bollinger Bands. We've got price above the moving average. We've got price at the top of the bands. Again, bullish, but on its own, we need to really look at I don't know anybody really in my career that looks at one indicator. Maybe there are a few that I've talked to, but generally combining indicators adds value and adds weight to any perspective that you might have. We've got higher lows in price. We've got higher lows in the oscillator here, the RSI, hopefully confirming those higher lows in price. We have MACD breaking above zero here and staying above zero for the last several periods, whereas it's been below zero. As the general markets rallied, you could imagine the bonds have struggled. So that's why you see the sort of the upside down picture. This is a very similar situation to Apple was at the end of March, early April, in the way it looks. So now you might be thinking, okay, I could get bullish on TLT as a Treasury bond fund if I think that the market perhaps is the stock market, to be clear, perhaps might struggle. And then just to show one more GoNoGo chart, this is what we see on GoNoGo. So we've had a no-go trend while the market has rallied, and then we have had a firing of go signals, as well as, you know, a low risk entry point, and we've got a change in trend identified on the bond fund to the bullish side. So if you are thinking the markets might roll over, you're getting some technical indication that the trend is up for Treasury bonds. And you can see how when the markets were rallying the stock markets, of course, the Treasury bonds struggled. So if you are of the opinion, you could take a sort of counter move by moving some money into Treasuries. But this is, those were the examples, Luke, that I wanted to show. I hope that a little bit of technical analysis background helps clear up some charts just in general, but also I hope it highlights this sort of simplicity of using data visualization to blend technical concepts.
Alex, can I hit you with a few more questions we've gotten out of the chat?
Yeah.
All right. Do you have a favorite momentum indicator?
Yes, the GoNoGo oscillator.
Okay.
But maybe I don't mean to be obnoxious with that answer, but the reason that I genuinely don't look at any charts except for this, and the reason that is because I put my favorite momentum indicators into this as inputs. So this, just like this is a blend of trend concepts, and this whole chart is a blend of everything that I thought valuable to my process as a technical analyst. And so this GoNoGo oscillator is a blend of all of the things that I think are important to look at in terms of momentum. Now,
And could you give us one or two of those items that goes
absolutely,
into it?
yeah. I mean, the reason I built the chart I built before was to give you guys a good, solid chart. So I would look at RSI definitely as a momentum indicator. So as a little sort of hint, that's in there. But yeah, I can't. I don't want to sit here and this is the chart I look at now. So that's what I use.
Awesome. And then another question is, do you use the average true range at all?
So in a word, no. The average true range is not in this complete chart, but I do like the idea of the looking at the volatility of price, average price movement as a sort of significant part of a total technical analysis picture. So average true range, no, is not in the specific average true range in study. I don't look at, unless I'm teaching technical analysis, and I may well show it because it's a well-used indicator, but it's not in my daily charts that I look at. But there are volatility measures in here. Maybe I can just show one chart real quick, Luke, if you don't mind, that there are other tools.
No, please do.
There are other tools to the GoNoGo Chart complete system. We have heat maps for sector analysis, relative heat maps, relative strength heat maps. We have a risk tool, all based on the same concept. But one of the indicators is called the GoNoGo squeeze. And the squeeze is not, I just said it, that I don't use average true range, but the squeeze indicates reduced volatility in sort of on a basis of whatever period you're looking at. So if you're looking at average true range to say, okay, average true range is really useful because usually the average range of trading during the day is this, and now it's very narrow, and now it's very big, then there is an element of that idea in this chart because I do think that's very powerful. I didn't use average true range to create it, but you can see that when there is reduced volatility or smaller trading bars and market moving sideways, this indicator down here is called the GoNoGo squeeze, and the grid climbs as volatility stays in a reduced sort of phase. And then, as you would expect with the whole idea of trading, of looking for volatility in this way, if you get a squeeze in volatility, it's like that toothpaste tube squeezing, you should expect a move in one direction when it comes out of that lack of volatility. So what we look at is when the squeeze ends, which way does the momentum, the GoNoGo oscillator go? Does it bounce off zero? Does it go below zero? On the S&P, Friday pushed the oscillator below zero for the first time on a daily basis since the end of March. So this is very significant for us to see that move. We would need to see the oscillator quickly reverse back to positive territory if we think this go trend is healthy and will continue. You can see back here when there was after the massive volatility we saw here, we saw some reduced volatility. We saw the GoNoGo squeeze, and then we see the move come out of the squeeze. So sorry, that's a long-winded answer, but no, I don't use ATR on a daily basis, but I do like the idea of looking at the volatility of trading ranges, and that's why I built the GoNoGo squeeze.
Well, Alex, and then I've got just two more questions for you, and we'll let you go.
Sure.
But does GoNoGo work with Thinkorswim by chance, or is it just TradingView?
Thank you. That's actually, I wanted to finish with that. GoNoGo is currently only available on TradingView. It's free to set it up there, and you can access the charts. If you go to our website, GoNoGoCharts.com, give us your email, and if you have the TradingView login, give it to us. We can enable you. We're in the, like I said, this has been in development for maybe several years, but it's new in terms of being available as a product, other than just me using it to talk to clients and students. But we are in the phase of trying to get GoNoGo Charts on as many platforms as possible. So we'd love any feedback regarding which platform you use. We are having conversations with several different people. So if you
Thinkorswim is at least one of them.
Absolutely. If you don't have TradingView and you want to go to our website, give us your email and ask us about developments like that, we would love to keep you updated with that stuff.
Well, Alex, and then the last one I have for you, maybe we can end it with the stock is we got somebody asking if you could pull up the go, no go on Boeing, BA.
Sure. So great chart. I've been looking at it a lot. You get your no-go end of February after a couple. By the way, the amber bars here are neutral bars, meaning no trend really identified. It's come out of a go trend. And they typically serve as a bridge between trends. So you'll often see you see how this is the weakening go color. You'll see a weakening, then you'll see amber, then you'll see the first of the bearish colors, and then the strong bearish as it drops. So that we see the no-go trend pulled out. We see a really long base, consolidating base, where it wasn't able to get out of the go-no-go trend. The huge squeeze here on lack of volatility, lack of lack of much at all happening, and these red dots, just to give you an indication, these come with the product, but they are lower risk entry points depending on the trend that you're in. And we actually were bearish still here as the oscillator stayed below zero. The oscillator breaking above zero, as with any oscillator, should lead price. This was our first indication that this down move is really threatened, as well as the amber bars in here and the really inability to make new lows. But this cross above zero, combined with then amber undecided trend, followed by a go flag, that was the way the GoNoGo chart picked out the price action here. Right now, we've seen a quick recovery and a quick correction. And what's interesting here with the GoNoGo chart, again, is as it corrected, the GoNoGo oscillator fell hard to the zero line, and we got another squeeze. So this is an interesting time, again, even for GoNoGo, for Boeing, sorry, as we test this squeeze and break below zero on the GoNoGo oscillator. So if this trend in Boeing is to rally or to continue, then this level, again, another great opportunity to look at traditional technicals because the chart is unobscured. We need support here, right? So if there is support here at this level, then the oscillator will not stay negative very long. It might just be a dip. And if we see a rally off zero on the oscillator, we will expect a leg up in price to test this high around 233. But given what we're seeing here, the go-no-go trend is go, but there is concern and it is being threatened by this activity on the go-no-go oscillator. And we need to see if it comes out of the squeeze into negative territory, which we would then expect would cause a break of that level.
Awesome. Thank you, Alex. And guys, I'm going to drop 2 links in the chat. The first one is for Alex's website, GoNoGoCharts.com. And the second one is it's going to be a little mysterious, but there may be a Benzinga GoNoGo co-product on its way. So if you want to get on the waiting list for that, go ahead and hit that second link as well. So I definitely recommend checking both of those out. Alex, awesome presentation. I love how you did a combo of walking us through some of the standard out of the box things that people can find on their own, along with explaining, how your proprietary indicator works.
Thanks, Luke. I really appreciate the time, and it was fun. Thanks a lot.
Awesome. And thank you everybody for attending our breakout. We learned a ton. You will be getting some videos sent your way, both on the options and on the technicals. I'm going to drop a third link in the chat. I know so many links. This will kick you back over to the main event. Next up, starting at right around 2:30, we're actually going to have Kevin O'Leary. That is the bald guy on Shark Tank. If you're not aware, Mr. Wonderful. He's going to be talking about some of his stock market strategies and some of the names that he likes right now. So, guys, thank you so much for sticking with us through this breakout. And go ahead and click that link I just dropped in to get back to the main session. I will see you guys back over there.